All right, welcome back to the show. The financial markets, something we pay a lot of attention to because I always want you walking away from this show with something of value, something of substance, and the mainstream media gets the stuff wrong. Why? Because they generate ratings off of negativity, and unfortunately that can lead to misinformation. So we try and pick a fight with them almost every day on this program. Not a better advisor to have on our program than Matt Rinkey. He is a top producer out in the marketplace, very well respected. So he's in here today to talk a little bit about the financial market, and I promised him today we're putting him on the hot seat because I'm going to ask him some really tough questions, and I want to see what the smartest guy when it comes to financial advice has to say about some really tough questions. So joining us in studio, Matt Rinkey, good to have you here.
Good to be here, Craig. Thanks so much.
All right, so tough question, everyone. No, real quick, where are we at today, right? We're past halfway through the year. Talk to us about the status of the market right now.
Yeah, despite what people think, the market's actually had a really good year. You know, the S&P, the U.S. markets are up good single digits so far year to date. People are probably in disbelief thinking about we had Brexit, we have this whole political uncertainty here, but now the market's humming along, doing well, the trend is positive, and people probably are still fighting it, not believing it.
So my goal here today is to ask you several questions, probably not in any particular order, but questions that we've gotten from our audience. By the way, if you have any questions that you want to ask, go to craigsewing.com. Any questions about your finances, the market, real estate, whatever it may be, craigsewing.com. Hit the contact Craig form, and we will get your questions answered for you off air. But these are just questions I see all the time, and even I have them, so it makes it pretty authentic. All right, so here we go. If you had all of your money in the market right now and you had to make a decision, gun was to your head, to sell everything or buy as much as you possibly can, one or the other, what would it be?
Yeah, I think I would be buying into what's your right plan for you? What's the right asset allocation? It's impossible to make a decision. You should never be buying everything or selling everything all at one time. You need to have a plan that lays out what should I be owning? How much of each thing? When should I be selling? What are those trigger points for me to be making good, informed decisions, not based on what's happening in the news or what's happening in the headlines? So there's never an all or nothing when it comes to an investment.
Something I have to remember for you financial guys is that you have a lot of disclosures and things you have to be careful of. So we are not making you make any predictions here. This is kind of me putting you on a hot seat, but this is by no means to be misconstrued as financial advice, correct? Are we doing that for you?
You got it.
Okay, good. Because at this point next year, do you think, Matt Rinkey, the market will be higher or lower using the S&P as our measuring?
Yeah, I think looking ahead, we need to be prepared for lower returns going forward. What this means for the next 6 months, which means we're into next year, there's a lot that can happen between now and then. But I just think based on valuations, where the stock market is valued, like what price are we paying? That's telling us that over the next longer term, 5 years, 10 years, that we're likely not going to be getting those big returns that we've seen historically speaking. So making an informed decision, an informed investment, that's leading me to believe that I would not be thinking that we're going to be getting 10% returns per year, but a lot more lower returns, which is affecting everyone's plans, because that means we might need to save more. We might need to do some other things to generate cash flow in the interim because the market might not be returning a ton over the next number of years.
And the market going down isn't necessarily an awful thing. It can create buying opportunities, and you just got to shift your strategy, but to just make sure that if you had a gun to your head, this is not necessarily a prediction besides we're making you do it. You think if you and I are sitting in the seat 1 year from now, you expect the market to have a lower score?
Yeah, that's a good question.
I told you I'm put on the hot seat.
Yeah, I don't know what's going to happen over the next year. I think as investors, I believe in capitalism. I believe that we need to be optimistic and realistic, and things are going to go up over time. What happens over 1, 2, 3, 5 years in the market is truly anyone's guess. But I know, and we know historically, that as an investor, we should be investing for the long term. And that likely means we're going to be generating returns if we're doing it right.
Market crashed. Not a lot of new laws came out to try and protect the consumer. I call myself a consumer activist for our audience, so I'm always going to bat for them. But there's a lot of controversy around things like Dodd-Frank, some of this regulation that doesn't necessarily protect the consumer. As a financial advisor, do you like Dodd-Frank in some of the new regulation, or do you think it hurts the consumer?
Yeah, I think the biggest regulation that we need to be aware of is this fiduciary law that's been imparted by the Department of Labor.
Okay.
That's probably the most impactful thing for investors.
Good or bad?
It's in the right direction, but it's not to where it needs to be.
Okay.
You know, so people in the financial industry now need to do some things that actually look out for their client's best interest. But it's not full reaching, which means that some of these advisors or brokers, whatever you want to call them, can still do things that aren't in their client's best interest, which makes no sense
So you can position as a fiduciary, which is supposed to be the more trustworthy role.
Correct.
Correct? But you can still have some back-end things that you can do that can incentivize a commission of some sort.
Yeah, there's advisors who say they're fiduciary, but in the same conversation, they might be able to switch to the broker role and not have to do the things that a fiduciary would. So you don't always know who you're dealing with. So you need somebody that will sign an oath stating that they will always act in your best interest.
Is that the way to handle it as a consumer that needs a financial advisor? Should you actually have them sign something?
You can absolutely ask your advisor, will he sign a fiduciary, or he or she sign a fiduciary oath stating that they will act in your best
That's
interest?
an uncomfortable question to ask a professional sometimes. So how would you advise someone to do that? Is it, hey, look, I just want to know that you're 100% a fiduciary, that you're not making commission? I mean, if you had to frame that question as if you were asking a financial advisor, how would you ask it?
Yeah, I would essentially ask it the same way, point blank. Ask it straight out. There's nothing to hide behind. There should be nothing to hide behind. And understanding how that advisor gets compensated is a big factor in that decision making. But ultimately, ask the question straight out.
Ask the question, are you fiduciary? Exactly how do you make your money? And will you be willing to sign something?
Yeah, absolutely.
Interesting. All right, let me keep firing some at you here. So short-term interest rates. Janet Yellen, what do you think the likelihood that she's going to raise interest rates?
I still don't think they're going to be raising rates. I don't want to be making predictions, but I still think the rates are staying low. And that's why the market's doing well, is because they saw the interest rate hike decision continuing to be pushed back. And so,
Should we care if she does?
I still think they're so relatively low that there's a lot of opportunities for people to, lock in low rates, whether or refinance or do things to be able to arbitrage and generate higher returns while locking in low rates on their, mortgage decisions and other financing decisions.
What do you think of the real estate market?
Yeah, I think, this is a location by location, decision. I mean, things have done pretty well in San Diego. Things are doing well. I don't know overall, but I know it's harder for some of the, my clients and investors to find really good opportunities, which means it's probably time to take a step back and be really patient when it comes to
I'm a little
buying.
nervous about this real estate market because, it's doing well. The numbers look good. The financing has not been so loose like we saw up until the crash.
Definitely.
So I think you have real buyers. My biggest fear, though, Matt, is that what happens when mortgage rates spike? Because that's not something the Fed necessarily controls. That's the market, 30-year mortgage-backed securities, treasuries. I don't want to get into your space, but those things could spike because the market reacts in a certain way. Do you have any fear of that? And does that have any ripple effect beyond housing?
Yeah, I mean, I absolutely would have an effect beyond housing. It affects business when rates go up. It affects a lot of things. It affects valuations of companies. So there's a lot of impact that rates going up in a short period of time can have. But I think ultimately, if you're an investor right now, what can you be doing to take advantage of these lower interest rates to make sure that you can handle any inevitable downside in a real estate cycle or in the stock market cycle? Just being able to extend your maturities, making sure that you have the ability to withstand any decline in the market and being able to pay your bills based on the rents or based on your income, so you don't need to worry.
Last two questions. I got to be quick. What's your biggest fear of this market?
My biggest fear of this market is people continuing to just behave badly and not having a plan and knowing how to interact with it. I know that the market's going to move up. I know that there's going to be periods of downside. I just want people to make sure that they're making good behavioral choices. It starts from within, not from outside.
Okay, on that note, what is the best piece of advice you can give to our audience in parting here?
Don't panic because of what you see on the headlines or the news. Just stick to your plan, create a plan, stick to it, and don't panic.
All right. Well, that was awesome, man. I appreciate you coming in here.
Thanks for having
Completely
me.
unscripted. Matt Rinkey is one of the sharpest financial advisors that you could ever meet. And I told him today I just wanted to ask him some really tough questions, either the things we're seeing at craigsewing.com, and everything he answered today was completely unprepared. And I just wanted to show you how sharp this guy was. And that was awesome, man, especially the part about how to get really drill down on your financial advisor. And let's remind our audience that you are a financial advisor. If you want to connect with Matt, he is obviously a wealth of knowledge, no pun intended. All right.